Okay, let's get to some housing news because we have articles coming out every day and we have new facts and figures coming out every day. And it's actually worth tracking them daily because things are changing so quickly. I am a house flipper, flipped over 100 houses and sold over 200. So I'm going to give you my unique perspective on this. But I have a couple projects that are on the market right now. And one of the things that have been so surprising to me about how quickly it has changed from tons of showings, tons of offers to virtually none, and then also even spiking back up a little bit recently with getting more offers again. Of course, we know that's just one market, but let's look at this graph and chart right here because this is the inventory growth / decline year over year. So when you see an inventory growth explosion, you see the start and or a strong indicator of a housing crash in that particular market. Now, right now, we only have these as the major markets affected, but we have pretty much every predictor known to our economic brains that this is just going to get worse and spread to other markets. But for right now, there's an interesting trend in these cities. So Phoenix, Arizona, Raleigh, North Carolina, Nashville, Tennessee, Austin, Texas, Cape Coral, Tampa, Las Vegas are experiencing the biggest inventory growth. The inventory is exploding in these. So you can see Arizona 167%, Raleigh 166%. And these are all the things that were super, super popular for like millennials and people extricating themselves from certain cities in California and certain major metros like Chicago and New York. So these all kind of where I would like to say like kind of the cosmopolitan like millennials went, or like kind of the rich millennials went, right? And other people, of course, too, retirees, people that just didn't want to pay all that money for big cities anymore. And so these are getting hit hardest by this market pullback right now. And I think it's just going to get worse before it gets better. So let's look at the ones that are faring really, really well. These kind of came out of nowhere. These are like the Rust Belt cities, right? These are the Rust Belt cities that people have not been talking about for a very, very long time. So their inventory is still declining. So no crash there yet. So this is from September 2021 to September 2022. We do not have the facts and figures, of course, from August yet because we're not done through August. But this is really, really interesting. And it's shocking to me how quickly this has happened. So if you're in one of those cities, let me know. If you just go to one of I don't know why my face is up there. My God, turn this off. If you just go to like a recently reduced in realtor.com or Zillow or Trulia or whatever, and to any of these towns, you can see the reductions that are happening daily and even hourly sometimes. And these are big price reductions: 30,000, 30,000, 75,000, 20,000, 15,000, 14,000, 31,000. It's insane. And 20,000. And what's kind of good about this though is that these homes are it's finally kind of getting into homes that are affordable. So we have affordability problems in this market right now, but as the housing crash kind of started, I'm considering it a housing crash. As it kind of started, it hits the luxury first, right? We saw this in 2007, 2008. It hits the most expensive home first, and then it kind of titrates down and goes down, and it's finally starting to hit the affordable homes, the mid-range homes, which is good. That's what you want to see, right? As far as a home buyer is concerned, you want to see that, especially since home buyers have to pay $118,000 more over their 30-year mortgage than they did just a couple months ago. So it's wild because the mortgage rates are increasing. For a $500,000 house, you have to pay $118,000 more in interest just over the last couple months. So these are, according to Fortune, the percentage overvalued and undervalued markets in the country. So you can see how many, it's not funny, but you can see how many are just insanely overvalued. And they're all in those pockets of population where people had been moving, right? The Austin, Texas, the Phoenix, Arizona, the Tampa, all of Florida. So they're predicting a big real estate crash in Florida, of course, and in popular cities in Texas and in Arizona. What is still considered undervalue is some of these, Rust Belt cities, some of the things in the Northeast, some of the things in the Southeast. Of course, Southeast, I think, is going to be a big winner in this. And it's just going to get worse. So I'm expecting these maps just to start to see a lot more inventory. But as far as the overvaluedness, I think we will see them fall back. Now, this is all a big deal, of course, but we're still seeing things back to pre-pandemic levels, right? It's not even like we're crashing below the pre-pandemic levels. That's how overinflated some of this was. You are seeing these huge reductions, these huge price drops, but it's still pre-pandemic levels of growth, right? So you wipe out maybe like 2 years of growth, but you're still incredibly expensive, and pricing a lot of the home buyers still out of the market. So Fortune came out and said an hour ago, on a national level, we're going to see 10% plus nominal home prices decline, and they predicted that, by a calculated risk predicted that. Despite the housing downturn, we actually don't see the housing employment dropping, as a lot of construction is going on. And my brother-in-law is a builder, and I was like, are they slowing down? Are they doing anything? And he's like, no, they're still selling. They're still out there. They're still doing it. This leads into my prediction that it's going to get worse before it gets better. We can see the Fed seen raising to 4% in 2022 and signaling higher for longer. So economists' consensus is for 75 basis points next week, and that was obviously already happened, but rates still seen to stay peak in 2023 as Fed battles inflation. So this is saying that they predict that in November and December, we'll have the interest rates go up again, maybe by like another 75% basis points. So this is the front loading of rate hikes we can see right here. And it probably might even go into next year. Jerome Powell, head of the Federal Reserve Board, is strongly committed to getting inflation back to the central bank's 2% target and won't stop its fight prematurely in the face of a weaker economic data, which means that they're probably overshooting the data, right? They're not giving it enough time, in my opinion, to really sink in to the economy and to maturate and to really see the full effects of their decisions. So what you have with that, unfortunately, is you have him being overly aggressive in the rate hikes, and even though there's weaker economic data coming in, he's not going to stop butchering the economy even more. However, it will stop eventually. So we expect the Fed to continue hiking rates until realized inflation prints come down. With the August CPI release, we saw that adding substantial urgency to the Fed's task. The longer inflation stays elevated, the more concerns for wage price spiral and or inflation expectations unanchoring rise. So Bloomberg economists said the dot plot will show a higher terminal rate in 2023 coming up. We think it will go to around 4.2% compared to 3.8%. And the decline in 2024 in rates won't be as steep as in June. September, it might show a decrease to around 3.8% to 4% in 2024 compared to 3.4%. So we think obviously it's going to get worse before it gets better. We can see this Black Knight report home index. So the annual home price growth rate is down, and we can see the 1 month home price change as being a smaller signal as well. So once again, all indicators here showing that probably going to get a lot worse before it gets better. The hardest hit being the most popular cities over the last 5-6 years, with the slowest hit being the least popular ones. It's a little hard for brains to function and think about sometimes, but it is so true. So if you're buying or selling, let me know. If you want to go follow along on TikTok, go do that. We have a lot of great questions on TikTok too. Hundreds of thousands of people are watching that. And if you have any questions for me here, drop down. The link is in the description. You can ask one, and I think for like $45 we can give you like a long answer, because we respond to every comment, every question. But if you want like a long, actually in-depth answer, go for it. But interesting stuff happening right now, and it's interesting to see. Big opportunity. Also, a lot of people are losing a lot of money too, unfortunately.